Hi, I'm Mr. Simons, and we've had a special request for another joke from the Smelly Socks joke book. I'm only too happy to provide you with another bit of hilarity. Here we go. So, Winifred. Why can't I go swimming, Mummy? Mother. Because there are sharks in the sea. Winifred. But Daddy's swimming. Mother. That's different. He's insured. So let's focus on economics. That's probably going to be more successful. And in this video, we're going to look at the costs and benefits of inequality. Challenging, interesting, relevant. Let's get started. When we're looking at the costs and benefits of inequality, we're going to look at the economic benefits and costs, and then the social benefits and costs. These are two separate categories. One thing I want you to think about is that we are definitely looking at the benefits of inequality. Now, this might seem a bit crazy to you because it's like, what are the good things about having inequality in terms of income and wealth in an economy? But as you'll see, there are a number of benefits. So let's start with the economic benefits of inequality. One thing is that if there is inequality in an economy, that encourages the labour force to increase education and skill levels. Because the idea is that if you can be more educated or more skilled than the next person, then you could earn higher wages. That the idea is that the incomes on offer in an economy are not equal. So if you can be more valuable to an employer, well then you could get higher incomes. The other thing is that inequality encourages the labour force to work longer and harder because the more rewards you can get. Because remember, if there is inequality, the rewards are not the same for everybody. Another thing is that inequality, the opportunity to earn unequal wages, so higher wages, makes the labour force more mobile. So this means they will move to where greater opportunities to earn higher wages are. The other thing is that inequality, if there are different amounts of money on offer out there in the economy, well, that encourages entrepreneurs to take more risks. Because if they take a risk, well, they could get a really high reward because there is inequality in the economy. If there was perfect equality in an economy and everybody could earn the same amount of money, why would you take a risk? There's no upside to you taking that risk. So with inequality, entrepreneurs, they're going to try and take that risk to get that higher reward. Now, this last point is a little bit more complicated, but it's very relevant. The idea here is that inequality creates the potential for higher savings and higher capital formation. Now, this sounds complicated, but I think we can simplify this for you. So the idea is that if you have higher incomes, then you can create higher savings because you're not spending all of your money on day-to-day expenses. Then with that savings, you can invest it in capital equipment to then in turn earn you more money and help build your wealth. So if you can earn unequal incomes, you can earn greater savings and then use that savings to invest in capital equipment and build wealth. If you can earn unequal incomes, you can earn higher incomes, you can then get higher savings because you've got more spare money and you use those savings to buy capital equipment and build wealth in that economy. So all of these are economic benefits of having unequal incomes in an economy. Now let's consider the economic costs of inequality. So the economic costs. Inequality, it's argued, can reduce economic growth. Before we look at that second point in that sentence, let me spell out how this might work. People on lower incomes have a higher marginal propensity to consume. That means with every dollar they earn, they're more likely to spend it. because they need to cover their living costs. And if they've got a lower income, it's likely living costs are going to take up most of that income. So if there is greater inequality and these people on low incomes earn less, then they're going to spend less, and that will reduce economic growth in an economy. That's one perspective. The other perspective here that I'd like you to think about is that, well, inequality can also increase economic growth, because if people are taking risks to get greater rewards, if they're investing, if they're spending, if they're being entrepreneurs, well, then that's going to potentially increase consumption and investment, aggregate demand, and economic growth. So there are two perspectives on this. Another economic cost of inequality is that inequality causes something called conspicuous consumption. And conspicuous consumption is kind of like materialism, where people buy fancy things just to show off to other people. And this consumption doesn't really add much to the economy. The other thing is that inequality can create poverty and social problems. So if you think about it, if people are at the bottom end of society, well, then they're going to be in poverty. They're going to require government handouts and government assistance, and also that they could cause tension in terms of them and people from other groups of wealth in society. Related to that point, inequality can also increase the cost of welfare to governments, and that can be a drain on a budget, lead a budget into a smaller surplus, or even potentially to a deficit. An increase in government spending. Okay, so these are the economic costs of inequality. If we then look at the social costs of inequality, you might say, well, some of these are quite similar to economic costs, and you'd be correct. There's not a huge difference in some of these. It's just the perspective we're looking at them through. A social cost of inequality would be social class divisions. So you see that divide between those that are considered rich or wealthy and those that are on lower incomes. It's kind of this idea of disharmony in a society. The other social cost of inequality is this idea of poverty, and we just looked at it from an economic sense. With poverty, we're not just thinking about, well, everybody is living on the street, that we can have this idea of absolute poverty and relative poverty. So that absolute poverty is that stereotypical idea that everyone in the economy is stricken by poverty, or at least the majority is. But we can also think about this idea of relative poverty. So some people in an economy are considered to be impoverished or living in poverty, and that can have an impact on society, even in a particularly wealthy economy. So say, for instance, in Australia, you wouldn't say that people live in absolute poverty, but there are examples of relative poverty, where a number of people in society are living in poverty compared to the rest of the population. So this is a social cost as well to think about. So again, with relative poverty, you've got some people, some groups in society that just don't have the lifestyles or incomes that are characteristic of that particular economy. So in Australia, in a developed, advanced economy, you have still some people that are living in poverty, that don't have the same lifestyles, benefits, incomes as a great number of other people in that society. And all of these can be considered social costs to a society of inequality. So there's our discussion about the benefits and costs of inequality, economic and social. Very important that you're aware, in economic terms, there are benefits of inequality. It's always a tension in society about encouraging some inequality, but also preserving equality, or at least improvements in living standards for the majority of society, and not just those people at the top end. Anyway, thanks for watching.